What's up, everybody? Good morning. Welcome to Coffee with a Killer. I want to make sure that we're actually live here. Should be. What a week. Who we got in here watching live? Looks like we got a couple folks. Where are you guys tuning in from on this blistery day? So we're going to go over quite a bit today. If you guys are new to this show or to this channel, what I do on Fridays is a call called Coffee with a Killer. And I go through some of the things that have helped me in my entrepreneurial journey over the past 15 years being self-employed, working with tens of thousands of people, building real estate portfolios, building algorithms, like the whole gig. So we started a little bit of a journey last week where we started talking about gold banking. So I want to cover part 2 of gold banking today, as well as another topic. But who's watching live and where are you tuning in from? We've got Hartville, Ohio in the house. Our neighbor, our long lost neighbor. Okay, so I'm going to share my screen here for just a little bit. I want to go through some different stuff. Who else is watching live? A bunch of people watch live, but they don't talk to me. It makes me sad. So the first thing I want to go over today, we've got, a tool that I've got on my screen now called, it's the BG10 ops center. It's the BG10 war room, whatever you want to call it. And what I did is I designed this to try to help people continue to get financially free. Okay. So I want to go over one of the tools. I'm not going to go over all of them, but dashboard looks a little bit like this. Make sure this is actually the right one. Should be. Dashboard looks a little bit like this. It's tracking everything. We're ready to roll. I want to talk about, just for a second, the Freedom Center side of this. And let me just make sure that this is updating. Should be. Salt Lake City, Utah, Canada, the great state of North Carolina. So I want to ask you guys some questions here. If you know better, you should be expected to do better. Do you guys agree with that? If you know better, you do better. You know the stove's hot, you don't touch it. That's doing better. For a lot of people, I believe that they just simply don't know better when it comes to their finances. So I'll be talking to somebody and I will jump in and say, hey man, how close are you to getting financially free? And they'll normally say something like, well, I'm not sure, man. Okay, like what % of the way are you there? Don't know. All right. Well, what's your financial freedom number? And they say something like, well, what do you mean? Like, what would it take to get you financially free? I don't know. So a lot of people, first and foremost, a lot of people just don't know better. They simply don't know. It's part of what I'm trying to solve is that. Now, if you know better, you should do better. You just should. And if not, shame on you, right? Shame on you. There's people, I don't know about you. I mean, for me, I got people in my life that count on me. So shame on me if I know better and just blatantly choose not to do better. They say, fool me once, fool me twice. If you guys know better and you just keep on doing the same thing over and over and over again, you don't have a financial freedom problem. You have a motivation problem. You have a self-awareness problem. Sorry, guys, I got to continue to come over here. We're making bank today on our stuff. I'm going to go right here. That should work. So this is helping people do that, helping people know better and then preferably do better. So this is starting with, your income versus your financial health. It's going to give you guys a progress on how close are you to your goal. These are just random numbers that I've just kind of typed in here. And it gives you your expenses and your passive income. Okay. A big part of what this is showing is like, dude, if you make, let's say 10K and your expenses are 5,500, dude, you've got $4,500 to invest at the end of the month. Now, what would you do, or what could happen if you invested your extra income each month into something like BG10 rather than just putting it in a savings account? So this is showing you, man, at 5%, you'd make 75 grand a year. At 10%, you make 105 grand. At 20%, you're going to make a 213 grand based on your income minus your expenses, giving you something to invest into. Stupid, right? 213 grand. Followed by, the breakdown of your expenses. And I'm doing this in a way where it's kind of helping you. Like, here's an alert. Dude, your housing is 35% of your income. That's a major red flag. So I wanted to show you guys this as a tool, because what it's going to do is it's going to help kind of set the foundation for the rest of the call. Same page? Who's this guy? Who's this guy over here?
What up?
What up, he says? Okay, so yeah, tools to help you and to help you know better and to help you get more clarity on like what you're doing with your investments. Phase 2 of the metals discussion, a lot of people were asking last week, well, if I'm borrowing from myself, if I'm building a bank, if I'm building this infrastructure, how does this make sense? Because if I'm lending to myself, I have to pay this back. How is this better than just going out and buying a car versus taking your money and buying gold first, lending to do the car? So if you guys missed last week's gig, it'd probably be a good idea to go back through it. Okay? So how does this make sense? Like, why would we approach this in the first way? How it makes sense is when you are taking a loan and when you are doing this in this fashion, when you are loaning against your own metals, when you are doing this against your own portfolio, there is an expense. You do have an interest-only payment. That's just auto-deducted. That's in the background. For me, it's like 0.7% a month. Where Havila gets powerful and where this really starts to make sense is if you have a 0.8% or 0.7% a month payment, and when you are lending yourself that money, you're able to put that money into something that generates more. What you've created is a cyclical is not the right word, but like a flywheel progression where it just continues. I borrow more, have 0.7%, and I'm putting my money into something that makes 5%. I'm taking my ROI, buying more, and this thing starts to snowball where literally, if you wanted to, you could be lending yourself every week, every month, every quarter, however you wanted to do that. This is set up in a way where I know people that are making their mortgage payment every month with their metals bank, because why wouldn't you? Why wouldn't you? Dude, I'm paying my taxes with this. I'm paying my mortgage every month. I'm paying my kids' tuition. Why wouldn't you? Because you're either going to be taking an out-of-pocket expense, let's call it 5 grand. You lose that 5K, or you take that 5K and invest it. You never lose the metals. Is that making sense? So where this works is when I am taking loans, when I am lending to myself, yes, I buy random stuff, but the predominant thing here is if I have a 0.7 or a 0.8% payment, what I'm going to do is I'm going to invest in something that gives me 10, 15, 20, 30, 50, 100% a month. I just made that payment, or could have made that payment 100 times. Now that is interest only, right? So I'm also paying back a little bit of the balance as well. Your balance is going down, and if every month you're buying more metals, your margin is doing this every single month. which allows you continuously to be able to lend yourself. Does that make sense? There's quite a few of you guys watching this. What questions do you have on that?
230.
230. Heck yeah, man. $230 for you guys on Blitz Automation, aka standard. So if you guys would have been those of you guys that were a part of the conversation this morning, you would have made back 50% of your investment already on the second option that I gave you a day. Making back 50% of your investment in a day, pretty doggone good. So there's two things here, guys. There's two conversations. And again, if you guys have questions or if you want me to clarify something, please let me know. So let me show you a little bit of kind of what more so this looks like as well. I think maybe this will help. When we get into the gold side of this, which is straight up, well, it's right here. When we get into this side of it, this is where we build wealth. There's such a big difference between cash, cash flow, and physical assets. I think you need all three of them. And in this fashion, how we're investing like this, we are getting the best of both worlds. As an example, silver's at 64. Where'd we go? Silver's at 64. When I started buying in my bank, it was right down here. So my metals on the silver side, I have literally tripled in value in just a couple years. My portfolio has tripled in value. Gold at an all-time high as well, I believe, 4,349. I think silver's going to 100. I think gold's going to 5,000. So what we're doing with this side of it, and all of this is built out for you guys, what we're doing is we are accumulating value in our vault. Okay? We're going to be gaining on that. So that's the other way that you gain margin is, number one, you buy more. Number two, what you buy goes up in value. Number three, you're paying down the loan. That is what's creating this margin where you can continuously lend. Stop using Amex. Start using this. We're going to put in the price for this stuff. Let's just say that we've got a price. Well, this is all fine. And then you start to add this. Let's say I just bought 20 ounces of gold. And I paid $26.50 an ounce. Let's just say that this is a couple days ago. Guys, look, I've got $53,000 worth of value. I can lend 75%. Well, now my lending is unlocked. Okay? I can take a loan. I can make a payment. You guys get the idea here. This is the value. This is where we're building that thing that is 100% generational. I'm not touching this stuff. I'm not touching my vault. I'm going to lend on it. I'm going to buy assets like a mofo, but I'm not getting rid of the gold. Why would I get rid of gold? Why would I get rid of silver? Again, like I paid 20 something dollars for my silver. We're at an all-time high. We've never, ever been this high. Same with gold. Why, dude? Like I was buying gold down here, at like the 26s. We're now, we've almost doubled. So the power is you're building something long-term that is not only gaining in value, but it's gaining in liquidity, it's gaining in power, and it's just circulating. My gold and my silver purchases happen automatically. Out of sight, out of mind. I just set it up on an auto buy. Don't even have to think about it. My loan repayment is set up automatically. I don't have to think about it. So when I'm busy trading with you guys for a week, or I'm busy with my kids, or like whatever, I don't have to stop and think of like, oh my gosh, I forgot about my gold bank. No, screw that. We're setting this up automatically where we're just building wealth in the background while we're living life. There's the thing where messes everyone up is it takes a little bit of thought process and it takes a little bit of setup the first time. They're like, oh my gosh, this is gonna take too long. And then 6 months go by and it's like, dude, you would have just had X amount of value, but it took too long. Setup took me too long. Come on. Really? What questions do you guys have about this? I'd love to clarify anything. So there's two things. I'll say it again. There's two things. We are both purchasing gold and we're lending on gold. Okay? These work together in tandem. They work together in tandem in the BG10 ecosystem. It's all part of the same thing. If you guys start to build a flywheel that has no movement, what's the freaking point? If you guys are investing into something that has no flow, it's stagnant. What's the point? So the whole gig here and like what I've been building has really been, like I said the other day, first and foremost for me. But I want to build something where like several clicks of a button, you can start a process and then do a little bit of management here and there. And it's like, dude, I completely out of sight, out of mind, but I just picked up X amount more ounces of gold or silver through this automation. It's just doing it in the background. And that silver went from $30 to 60, went from $60 to 100. I just built margin. And I'm making payments back to the balance, the principal and the interest. So every time silver goes up, and every time I'm paying it down, and every time I'm buying more, I'm creating this flywheel that is now, okay, great. Now I want to go buy a motorcycle. It's $4,000. Cool. I'm just going to lend it to myself so I don't lose the money. Value goes up. You make payments over time, and you're creating more and more and more and more and more and more and more margin. Is this making sense? I'm getting like very little feedback here. Like, is this making sense? So how the whole flow works is we are generating cash. For a lot of you guys, that's probably either your JOB or maybe it is trading in EAT, 8 a.m. trade. You're generating cash. Back to our, share my screen again here real quick because this will make more sense if I can show you visually. We are generating cash. Okay, this number here, this gross income, that's cash. This goes up, great. Your financial health score will also go up. Okay, if you only make cash, if you only make good money and you never buy passive income, you will work until the day you die trading time for money. I think a lot of you guys understand that concept. Okay, so we are going to be increasing our cash flow. We're going to be using our cash to buy cash flow. Let's just put in a couple more of these. $500 a month for transportation, 500 for insurance. Don't really have credit cards. 250 subscriptions, probably 250. I don't know. You see, there's a difference here between what I'm earning, this 10 grand, and what my expenses are. If I earn more, is giving me more room to do what? To buy assets. Okay? Let's say I take some of this money, which in this scenario, income, expenses leaves me 3 grand. If I just put this 3 grand to work, it would turn into $142,000 the course of 12 months. So guess what? I'm buying cash flow. Now my cash flow is going to go from 400 up to 1,500. Watch what happens to the 6. I'm 21% of my way free now. Okay? I'm making more money. I get to 3,500. Man, I'm halfway free. And you can do this quickly. Just investing your leftover 10 minus whatever. Just doing this. I've got 3,000 to invest a month. It doesn't do jack diddle for you. in a savings account. You're losing money in a savings account. But if I'm investing that 3K here, if we only make 5% a month, my 3K is turning into 50K, right? So I'm getting closer to being free. And on our dashboard here, you can see that. You're building profit over time. Your expenses are going down. Your passive income is now going up. It's now at 3,500. You are well on your way to getting free. Here's your gold. Here's the value. Now you're building wealth. I literally just set up a $500,000 whole life insurance policy with cash value last week. Your system sounds like that policy on steroid. It is. So whole life insurance, aka infinite banking, I mentioned it this morning, like I shouldn't say all, most banks do it. Almost all major car dealerships do it. Every wealthy family office does it. So that taking that concept of like, what do rich people do? Guys, if you just do what rich people do, you will also be rich. Does anybody disagree with me? If you want what you've never had, you've got to do something you've never done. And most of you probably just don't do what rich people do. I ain't that smart, but I figured it out a while ago. If I just do what these other people are doing, and they're more successful than me and they have more money than me, or even though I'm not super intelligent, certainly some of that will rub off on me at some point, right? Wealthy people have whole life insurance. I don't particularly like whole life insurance. What I do like is something physical that I can see and touch and like invest, like that's gold and silver. Like I've got gold and silver at the house and the vaults. I've got the Havila vault. Like that's physical to me. Whole life insurance to me is just like it's a piece of paper. It's not physical. It's not tangible. Well, Jordan, it has a cash value. What's the caveat with that? Really quick in the chat. I know there's a delay. What's the caveat of that? Jordan, your whole life insurance policy has a cash value to it. What's the caveat? I mean, I wouldn't say cancel your policy. I think they could work in tandem, Like I'm not here to pull you away from anything you're already doing, more so just show you, some things that I have found. Again, the point of this show is things that I have found to be impactful. What's the caveat, guys, to the cash value? Anybody know? And my ex-business partner, some of you guys probably know him, completely disagree on this. He is die-hard whole life insurance, probably because he doesn't know about this. You know how many different like whole life insurance policies there are? Millions. You know how many gold banks there are like this? Well, one. All right, I'm not getting a response from anybody, so I'll just tell you. The problem with a whole life insurance policy having a cash value is what if the cash doesn't have any value? You guys catch that? The problem with your whole life insurance policy having a cash value is what if the cash doesn't have any value? It's based on the US dollar, yeah? Yes or no? Yes, it's based on the US dollar. Okay. What's the US dollar doing? Losing value. So you're telling me your whole argument, this is just random people in the street, your whole argument is you're doing whole life because yes, it's insurance, but it also has a cash value. But cash is losing value. Is not your whole life insurance policy losing value? Everything that happens to the dollar. We could pull up the charts right now. We could pull up the charts. We could look at the value of the dollar and what's it doing. Inflation, how is that impacting it? You know what's not losing value? Silver and gold. In fact, they're at the all-time high. You know what silver and gold can't do? go to zero. I don't have the same confidence in the US dollar. Yeah. So we'll continue to talk about this, and as more of you guys get this tool that I've built, and I haven't even filled mine out yet. Like, this tool is new in this format. I do use these tools in different formats, but on this format, this is new. So I'm gonna get it filled out. I will get some of my stuff in there, so it's a lot easier once you guys can visualize everything actually input in here. So we'll continue to talk about this. True of a stock portfolio as well. It's based on the dollar. Yep. And that stock can go from being worth $150 to being worth $1. You're not going to see, like, here's why. And I know some of you guys might be thinking, well, gold can go to zero, or gold can have a negative impact. Silver especially. I mean, like, both of them, but silver especially. Like, they use silver in all of the electronics. So what's the argument that electronics are like no longer, like, all electronics are just gonna all of a sudden stop using silver? No. So many countries are reliant on gold. So many countries are reliant on silver. The other two things that we invest in is platinum and palladium. Gold, silver, platinum, and palladium. Platinum and palladium not as forefront, because most people are familiar with gold. But you look at, like, what platinum's used for. Look at what palladium's used for. Like, show me any, like, well, let's just look at it. Let us not generalize. Let's just look at gold. Let's look at the daily chart. Let's look at the monthly chart. Other than a couple, I mean, this is all the way back into like what does this go back all the way to? Other than a couple dips in 1981 and 2008 and 2012, other than a couple little dips, we've done nothing but go up. Same with silver. Change this over to like the monthly or whatever. Now silver's had a couple bigger dips, yeah, but its dip going nowhere close to zero. In fact, it dipped for 2 months, went back. It ain't going to zero unless we stop using electronics. Guys, we are back. We are back here in a little bit. We're back at 1 o'clock Eastern Standard Time. If you guys go to our YouTube channel, you'll see that there's a link already created for the 1 o'clock show. That show is the VIP After Hours, where we get some traders together. We talk about the week, all of that. If you guys can be there, try to be there. Again, the link is just in YouTube. You'll see it as a pending live call. I'd love to see you there. We'll continue to talk about this. Hopefully by next week, I'll have more of my stuff built out so you can see more of an example. And hopefully in the next week or two, you guys will also have this tool so that you can begin building this yourself, right? Love you guys. We'll talk soon.